Hello, welcome to another live broadcast of Master Investors Company, coming to you again with another valuable content. Make sure you hit the subscribe button, turn on the notifications so that you are aware when we go live again. Today's topic is extraordinarily important because, as we know, when we are investing, we either are investing for capital gains or passive income, aka cash flow. And here at Master Investors Community, we always focus on investing for cash flow, which is the best type of investing that we can make because money or passive income, if you will, keeps coming in even during economy crashes. So let me show you why it's so important. Make sure you head to our website at www.masterinvestor.education, subscribe to our newsletter, and also enroll into a wealth course. The first one we have here on our page is what are the 10 new rules of money to become wealthy. Okay, and this ebook, you can also find this on Amazon by going into, you go to Amazon, let me show you if you'd like to get it from there. And go the 10 new rules. The 10 new rules of money. Let me see if it's here. 10 new rules of money. Let me put Master Investor because I'm not sure if it's. But it's on Kindle, so you can actually. There it is. See, right here. It's 40 pages long, and this is going to teach you exactly what are the new rules of money so that you can operate with the rules that count today regarding business and investing. Because remember, money evolves, and so the laws changes along the way, and we need to take into current consideration what have changed in order to be able to approach business and investing with a rich mindset. So this book right here is essential for one's business library, okay? But I also suggest you to come here and get it on our platform because you're going to have access to more things. You're also going to become a paid partner to our platform. You'll get a back office and you'll have access to many other benefits, okay? And as we grow the community, you're also going to get invited into different webinars, free ebooks, and emails that are exclusive to the pay partners. Okay, so make sure you go to any of the wealth courses that we have available today on our website and enroll. Make sure you get started with building your passive income by focusing on the asset column. Okay, very important. So let's start with today's video blog. As you can see, last video blog we did was how to optimize time to have it all and become affluent. We have that on our playlist. After you get done watching this, or when you have some extra time, go ahead and watch the video. You can also just go straight to our blog and read it, okay, whatever you like to do. So today's topic is what is investing for passive income, okay? The first thing we need to understand is that during hard economic times that's when we can really tell the difference between two vastly different types of investors, okay? So we will explain by sharing an example of two recent exchanges we had with some investors. One capital gain investor, a successful doctor, met us for lunch. How's things going, we asked. It is rough out there, he said. His 401k is taking a beating. This wasn't surprising. The stock markets have been harmed. And Hammer recently, we could see how his perception of the market will be a negative one. So in other words, people that invest in capital gains are oftentimes moving according to the market. So if the stocks are down and the economy is crashing, they oftentimes complain about losing money in their investments, okay? Because their assets that are not real assets, if they're not putting money into their pocket, then they're not real assets. They're paper assets, and they're waiting for value to go up so they can sell it at a higher price and they purchase it. So if the economy is crashing, then the value of that stock or that paper asset is losing value. Or it could be a home too. If they bought a real estate for capital gains, that means that they're focusing on holding that real estate only for the purpose of the value to go up, but they're not really renting out that real estate to other people's for passive income. And that's what we do here at Master Investor. Everything that we do is for passive income, okay? So we can actually invest in stocks for passive income, and I'm going to show you how to do that. We actually did a video blog on that, and so you can watch it, but we're going to cover it a little bit here. There's advanced strategies that you can apply into the stock market where you are obtaining dividends, and also through a strategy called call strategy. It's a call option. And so when you pretty much renting out your stocks for an exchange of a passive income that you're receiving. And so it's important to always get educated financially, because financial education equals cash flow, okay? And the lack of financial education equals capital gains, because that's all they know. They just know to buy something at a certain price and hoping that the market is going to go up so that their asset, their fake asset, is going to go up in value and they can sell it for a capital gain, which is the highest tax investment that exists, capital gain. You have to pay taxes at a higher rate than passive income, okay? So we were at a conference with another partner, a successful cash flow investor in real estate. We asked the same thing we asked the doctor capital gain investor, but his response was very different. I'm doing great. Cash flow, aka passive income, keeps coming in, and I'm on the hunt for discounted properties to build my cash flow portfolio. What was the difference between these two different investors? We would like to start answering that question by first exploring 3 different types of cash flow patterns. The 3 different types of cash flow patterns, we have written about the 3 different types of cash flow patterns before, but it will be helpful to review them here as well. The cash flow pattern of the poor. The poor are often known to laymen that they live paycheck to paycheck. Okay, as you can see here in front of your screens, this is the cash flow pattern of the poor class. Okay, they have a job, earn income. The income flows into their, right, from the job to the income column, and it goes down to the expense column to someone else's, and out their expense column to someone else's asset column. Remember, everybody's expenses is someone else's asset column. In other words, somebody else's asset is in your expense column. Okay, so if you have a payment here that is due, usually that goes into somebody else's asset column, okay? So that's all they have. They have a job, they earn money, they work hard for money, and then they have expenses, they accumulate more expenses, and they never see their money come back into their income column. They just go out their expense column into someone else's asset column, okay? And they are not wrong. Most poor people have a cash flow pattern that looks like the one above. Income comes in the form of a paycheck and promptly goes out to various expenses. If they are lucky, they can cover their expenses each month. If not, they take on debt that becomes bad debt, often in the form of credit card debt, which only makes them poorer and increases their monthly expenses. Remember, 2 types of debt, good debt and bad debt, okay? Good debt puts money in our pocket and it gets paid with somebody else's money because we invested that debt into acquiring an asset that cash flows and therefore produces passive income to pay the interest and the credit card back, and also leaves us with positive cash flow. So that's good debt. But if we grab debt and we obtain something that is only taking money out of our pocket each month, now we have to pay that and also the interest plus the credit card. And so we're paying it with our own earned income. We have to go work hard to pay that credit. So that's bad debt. And that's what happens with people that are uneducated financially. They use credit cards to buy liabilities. Okay. And we, the rich, we use credit cards to, or loans, if you will, to acquire assets. The only way they can get ahead is to get a higher paying job or another job. They're always looking for a new job, something that pays them more money, something that, have more benefits, etc. So the language that the employee speaks or the poor person speaks is critical in the way they succeed in the money game. Because remember, business and investing is all about learning the business language and use it properly on our daily basis so that we can acquire great wealth. So a lot of times it's all about improving our vocabulary that makes the difference between a wealthy person and a poor person, okay? Just to make ends meet. It is a very sad way to live at the end, because they're working for money. They're basically slave to something that is dead, something that is a piece of paper or is an idea backed up by confidence. They do everything that money tells them to do. So what we want you to get here is that the more you invest in your financial education is the tool that is going to liberate you from being a slave to money, and you will make money a slave to you, which is a big difference. Now, here's the cash flow pattern of the middle class. The poor aren't the only ones who live paycheck to paycheck. Below is the cash flow pattern of the middle class. As you can see, they own a job, basically, right? Either they are a doctor, a dentist, an accountant, an attorney, and they have to show up to their firm or to their small business. Okay, but a lot of times these people can only make money while they're at their job, right, that they own. They don't have a boss above them because they have their own firm or their own business, but they don't have any systems in place that allows them to sell and serve the problem that they're solving on autopilot without them having to be present, okay? So they get the income from that firm or from that small business that they have. So they own a job. They're part of their business. They work in their business, not on their business. And so they get their money, their income, as you can see it right here, and it flows like that to the income column. It goes out the income column down to the liabilities and then to someone else's asset column. But here they go and they pay expenses, right? So it flows into their liabilities column and goes up the expenses and out to someone else's asset, right? Because their expenses, I should have put something else right here. So I'm going to fix that. I'm going to put another line right here because it goes up from the liabilities to the expense column. And that's the difference between the poor and the middle class, that they have liabilities because they have a higher paying job or they make more money, and they have oftentimes a better credit, and they can get better liabilities. They get, things on their credit, but they're not putting any money on their pocket. So they usually have a nice house or a nice car, and everything is pretty much on a loan, but it's taking money out of their pocket. So it's bad debt. But it usually goes up to the liability right here column, and then it goes up to the expense column and out to someone else's asset column. So by the time you go to our blog, I will have fixed that, okay? So the middle class can often seem rich to the outsider looking in. They might have a big salaries, fancy houses, nice cars, and more. But what they really are is just living the rat race. Instead of putting their money straight to expenses to live like the poor, they buy liabilities like vacations, houses, and luxury cars, which then means their money goes from their out the expense column. They might also put some money in a 401k, like the doctor friend, right? But as I will show you later, that also is a liability, not an asset. Because remember, the 401k, those vehicles are not a real asset. They're liability because they're paying into that every single month, but nothing is coming back in the form of passive income. So an asset puts money in our pocket, a liability takes money out of our pocket. And so if it's not putting money into our pocket, whether somebody else calls it an asset, then it's not really an asset, okay? And so a lot of people have mistaken the definition of a true asset. So they don't even have assets when they're investing in mutual funds, 401ks. It's all paper assets that mean really nothing because it's not putting cash flow. And when the economy crashes, they lose their whole portfolio. The interesting pattern for the middle class is that as they get more liabilities, their taste grows and they want more. So they get a higher paying job and then buy more liabilities. But here is the scary part. If they lose their job or they simply close their firm or business, or they don't show up to their business, they can't cover their expenses. Why? They don't have any income outside of their salary, and they often have large liabilities and expenses. If they are lucky, they can get a new job before it catches up to them. If not, they declare bankruptcy. The cash flow pattern of the rich. The rich have a vastly different cash flow pattern than the poor and the middle class. It looks like this, right? We have assets, and that is the income that we receive in our income column from our assets. So the income comes from passive income, from cash flow and assets that we control. And then we pay our expenses and liabilities with our assets. So it usually flows into, goes into our income, and it goes down to our liabilities, up the expenses, and then it comes back to our asset column. Usually our liabilities, we turn them into an asset. So let's say we have a fancy boat or a fancy car, we can turn that liability into an asset by renting it out when we're not using it. So the liability actually makes us, more rich because we have the ability to turn it into an asset, okay? And so because we direct the cash flow back into our asset column. Very simple. The truly rich obtain their income from their investments in the form of cash flow, aka passive income. They use the income to buy liabilities and pay their expenses. They don't rely on a job or a salary to do this. The money comes in each month in the form of passive income. The difference between earned and passive income. The biggest difference between our doctor friend and our real estate investor friend is that of earned versus passive income, which is really at the core a mindset difference. Let's start by looking at the cash flow circle. As we can see on the left side, we have the employees, self-employed, and on the right side, we have the business owner and the inside investor. But the business owner means that you have a system of systems. When you are self-employed and you just have a business that you have to show up like a doctor or a dentist that goes into their own private practice, they are self-employed. They just own a job. They don't really have a business because the business is not working hard for them. They have no systems in place where they can depart from that business and continue to make money, right, in the form of passive income. And then on the right side, we have the I's, with stands for inside investor. So E is for employee. Employees value security and look for a great job and salary. S is for self-employed. The self-employed value freedom and independence, but they don't play well with others. They are the best at what they do, so they don't trust others. They don't own a business, but they own a job. If they don't work, they don't earn. So while they have freedom in the sense that they are their own boss, they aren't really free because they still have to work for money. B is for business owner. Business owners value independence and freedom as well, but they obtain it by building a system and a team. They don't have to work to earn because their business makes their money. And of course, through the systems that are doing the selling and telling for us. I is for the inside investor. Investors are the smartest financially of those in the cash flow circle. They use their money to make money by investing in assets that produce cash flow each month, real and true assets, right? the difference between those on the left and right side of the cash flow circle is that of mindset and cash flow. The E's and S's are concerned with security, so they work for earned income. That is income others generate and then pay them for their efforts. Essentially, they sell time. B's and I's are concerned with true freedom. They build businesses and make investments that provide passive income to cover their expenses. If they don't want to, they never have to work another day in their life. What is investing for passive income? Two types of investing: capital gains versus passive income. Those on the left side of the cash flow circle can sometimes think of themselves as investors. For instance, our doctor friend did when he talked about how poorly his 401k was performing. But the reality is he's not an investor, but rather a gambler, a trader, if you will, which a lot of these people out here in the market or in the internet talking about investing, they're really talking about trading and gambling. They don't know anything about investing, at least not true investing, okay? Because they're pretty much buying something at a certain price, holding it, and praying that it's going to go up in value so they can sell it. That is too risky, and that has no financial intelligence invented in it. Okay, a monkey can do that. So it takes no financial education to do that. Anybody can do that. The E's and S's often have high intelligence, just not financial intelligence. We can't do what the doctor investor can do. You don't want us making your health diagnosis, but we know a lot about money than he does, because he has low financial intelligence. Even though he makes a lot of money, he's concerned about his money. It's not the money that makes you rich, it's the knowledge that we have regarding business and investing. And the reason why we talk about business here is because investing is business. Because he puts his money into a 401k, he's at mercy of it going up and down each month. Even worse, it is actually a liability because it takes money out of his pocket each month and doesn't put any money in. It could be an asset, but only if he collected the earnings. Until then, it is a liability, and hopefully when he's ready to retire, it will be up. It is not today. Here's what his investing pattern looks like: capital gain investing, right? So he has paper assets, right? For capital gain, only way to make money is if the asset goes up on value and someone buys it, right? And he sells it. Some people only are investing for what is known as capital gains. They're hoping the price will go up and that they can sell it to make money in the end. It is a gamble, but like all bets, it can pay off. Unfortunately, it is also the highest tax investment, like I mentioned earlier. Our real estate partner is on the right side of the cash flow circle, where folks invest for passive income, aka cash flow. We earn rent from rental properties each month, enjoy great tax benefits, and have only a small amount of our capital in the deals, which is recouped back very fast and surely is a free money printing machine. When we have recouped our invested capital back and continues to print cash flow, then that is when we reach infinite return on investment. OI, infinite return on investment. Very important to remember that term because that's the holy grail. Okay, we want to recoup our money back quickly, whether we're using a credit card. So if we invest $1,000, $10,000, we're using a credit card or a loan, we want to recoup that money back. Or if we raised it from other investors, then we're going to recoup that money back, obviously, from the business or investment that we acquire and pay that back and then continue to control the investment so that we can collect more cash flow. Okay, but now it's free cash flow because we don't have any money invested into the deal, and then we can use that cash flow to acquire another asset or maybe even build that asset more by acquiring an asset that goes under that asset. Okay, but the asset is buying our assets in our lifestyle. That's what's key. Okay, so because we have a long-term leases, our income is consistent even in down markets. And when the market goes south, we see only opportunity because the types of assets we acquire, rental properties, go on sale as buy investors and other individuals begin to lose such investments because he or she invests for passive income. Our assets, right, cover our expenses each month. We enjoy true freedom. Here's what the investing pattern looks like below when we invest for cash flow investing. Right here, we have assets and it comes into our income column. We focus on the asset column. Type of passive income investing. Hopefully you have learned enough to know that investing for passive income is vastly superior to any other type of income. To finish out this post or this video blog, we would like to quickly share different approaches to investing for passive income to get your mind going. Our advice is to see what interests you most and then do a deep dive to learn all that you can about it. Real estate. We have already hit on this in the post, but real estate is one of our favorite investment category for passive income. In real estate, your passive income is made up of rent. Simply put, if your rent covers your expenses, you will have passive income. The more investments you have or the larger they are, the higher your passive income. Additionally, there are great tax benefits in the ability to use OPM, other people's money, to easily get into real estate. Okay, other people's money is a loan that we get from a bank, or literally other people's money from, let's say, investors that have excess of cash flow and they need to put it to work. Because once we are successful as a business owner, that means we own or control a system of systems, and that is making us constantly passive income. And now our job is to not only raise more capital with that capital that we have, but to put it to work. That's what the job of an inside investor is, to put that capital to work and make it multiply. So money is always finding a safe home to be able to be multiplied. So when we know the knowledge of money and we have the right language, we can raise capital. And that's the job number one of an entrepreneur, to raise capital. And the number one skill is to learn how to sell without selling. Stocks. We get knocked often for being against stocks. While we don't like stocks as capital gain investments, we do like them for passive income. Two types of investments we can make in stocks for cash flow are dividends, like I said earlier, and the cover call strategy. If we want to learn more about this, we encourage you to read this in-depth post that we did, Investing for Cash Flow with Stocks. You can find it on our blog right here session. We did it like 3 weeks ago. Business, you do not have to be a business owner to enjoy the benefits of the B quadrant or the B cash flow circle on the right side. A great way to create passive income is to invest in other people's businesses. As an investor, we can have control, often in the form of a board seat, and help steer the course of a business to great profitability. Unlike a business owner, we don't have to manage the day-to-day or be responsible for the operating aspects of the business. You simply enjoy the profits in exchange for your capital. Your capital is working hard for you, right? So we have money working hard for us. And that's the whole goal here at Master Investor, is that rule number one, we make money work hard for us through the ability to acquire and build assets, hopefully, again, by raising capital, using other people's money, because we understand that money is always finding a place that they can, that it can multiply, okay, successfully. So the bank is always in the business of lending money. So it's always looking for smart inside investors that know how to put capital to work, right? And successful inside investors that have excess of cash flow at their disposal because they have a lot of different businesses, or they have one business that is making in tons of capital or in the form of cash flow. They're looking to put that money to work. And so they're always finding, hey, I want to invest in your business because I like the business plan, I like your partners, I like the management, and I like the terms. Okay, how fast am I going to get my cash flow back, my money back that I'm investing? How much is going to be my cash flow thereafter? Start investing for passive income today. While investing for passive income is a great strategy, it does take financial intelligence. I encourage you to start by learning everything you can about the investments you are most interested in. Also learn everything you can about money. Take classes, hire a coach, and consume as much free education as you can. There's so much out there in terms of resources, more than ever in human history. All you have to do is take advantage of it and then make your move. Here at Master Investor, our mission is to elevate the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities that creates passive income and true wealth. Order and join our community by getting into our digital courses that has this ebook right here, as I mentioned earlier in the post in the video blog. Then the 10 new rules of money. You can find it on Amazon, but you can also go to our course session and get your back office. You'll have access to it at all times. And as we add in more things into this course, you also have the benefit to get exclusive webinars, invitations to special events, and as much other great lucrative opportunities that we are offering for our pay partners. Okay, the rules have changed, and so learn the new rules to approach the game of money, business, and investing correctly. Okay, I hope that this valuable video has been helpful to you today. Thank you for your time, like always, in your business. We appreciate you very much. Make sure you give us a like, comment, and subscribe. Bringing you the good and bad news of money, the business principles that work in all economies. I'll see you on the next live broadcast. Bye for now.